What has not happened in the last 1 week? We have literally seen everything what we generally get to see over an year or a decade. So it all started on 4th of April when Trump announced reciprocal tariff on most of the nations, starting with a base rate of 10%.
Whatever they're charging, we're charging. Very simple.
Post that, we saw one of the biggest stock market crash ever since 2020, where most of the stock market indices across the world fell anywhere close to around 15 to 20%, hardly within a span of a week. So this is the worst crash, you can again say, ever since 2020.
We have been ripped off for decades by nearly every country on earth, and we will not let that happen any longer.
So this was the time when Trump thought, okay, all the nations would come and try to negotiate with him, but China did the exact opposite. So rather than trying to negotiate with Trump, they said that, okay, if you are going to put tariff on us, I'm going to put it back on you. So they put back the reciprocal tariff on Trump, and Trump really did not like it. So very next day he said that if you are not going to remove the tariff, I'm going to put 104% tariff on you.
Whenever they tariff us, other countries, we will tariff them. That's reciprocal, back and forth.
And China was like, okay, bring it on. And Trump put the tariff and they put back the tariff saying that, okay, if you're going to put 104%, then I'm going to put 84% back on you. So this to and fro created a lot of turmoil in the market. So the crude prices fell nearly close to around $50 per barrel. The US VIX shot up to nearly 60. So this is the highest that the US VIX has ever gone since 2020. Overall, if you look at it, there was a lot of uncertainty that happened last week, and there was a lot of volatility in the markets. So people who had carried positions on Friday so were pretty scared with a gap down on Monday, and people who had carried positions on Wednesday are again going to have sleepless nights thinking about what is going to happen when the market opens tomorrow. So I wanted to make the video end of this week, but already so many things have happened, and the video, as you know, the title is going to be Have We Bottomed Out? So in this video, what I will try to do is essentially going to present you with the historical data of how the market has reacted into various situations earlier, and are we actually at the bottom? So in my opinion, I believe yes. So we are more or less making the bottom, and I will also show you some historical evidences why exactly it might be a good time to start buying. So I had already made earlier videos on this, but let's start by looking at what is exactly happening to the markets. So firstly, let's start by the news which is flowing in. So generally what we have to understand is anytime any bad news comes, the market will always proactively react to it. So that means if you take a look at the Indian markets in 2020. So here I will put monthly chart, and you can see Jan month was when coronavirus was first discovered. So our markets fell nearly 1%. Then February it slowly started spreading. Our markets fell 7%, and in March it finally came to India, and our Prime Minister Modi announced lockdown on 21st of March 2020. So believe it or not, so by 21st of March, absolutely nothing had happened to our economy. Our economy was quite strong, everything was going good, right? So our markets before 21st was only down nearly around 37% with nothing happening. Only 1% had got the COVID case, and it was already down nearly 37%. The thing is, the day when the lockdown was announced was the day when the market actually made the bottom. So I hope it was 21st of March or 23rd of March when the market actually made the bottom and it started heading higher. So this was the same time when even our Prime Minister had announced a lockdown. So if you see historically, it not just for COVID, let's go back to the time of demonetization. So when demonetization was announced, immediately the markets fell close to around 8 to 9%, and within a week the market started to recover. So same case goes to Russia-Ukraine war, where it got slightly extended by a month. But if you go to maybe February of 2022, so let's go with the demonetization first. So if you take a look at this, 8th of November 2016 was when the demonetization was announced, and you can see within the next 1-2 weeks, so we were bottoming out and we started to head higher. So further, let's go back to 2022 where Russia-Ukraine war actually happened. So you can see this particular candle was when the war was actually announced and the war started to take place, and within next week, so we sort of bottomed out and headed higher. So then again, this would be general market correction course. So this is not again due to Russia-Ukraine war. So it was a general correction which happened in the market. But sooner or later, we were able to bottom out and head higher. So what we have to understand from this is you can go back to any historical event, right? So maybe Japanese end trade or whatever it might be, right? So the market actually proactively reacts and absorbs all the impact upfront. It is not that if the impact of COVID is going to be felt for the next 2 years, for the entire 2 years market is going to be down. It is not that if Russia-Ukraine war is still going on, it has not come to an end. But I'm pretty sure market is never going to react to Russia-Ukraine war again, because it has more or less priced in all the impact. So it was not in 2022 where the real impact was seen. It was in 2023 and 24 when the oil prices started to go up. So when the deficit of European countries started to go up, but it was already priced into the markets, and today even European markets right before the fall had hit a new all-time high. So what we have to understand is market is going to react proactively, and even to this fall, what we have seen in the last 1-2 weeks, right? So market is most likely not going to react to these news again in the same way. So what we have seen, a 20% down move, 10% up move. So going forward, if Trump is, let's say after 90 days, going to come back and put the tariff again, right? So we might see a 1-2% down move, but very unlikely we are going to see anything like a 10-15% down move on how we saw recently. So because the market proactively tries to price in the entire impact. I also believe going forward, even if China and US trade war is going to escalate, right? So it is not going to cause a lot of impact on the market because the markets would have already priced in. So if this is one set of data points what we are going to discuss. Now I'll show you other set of data point where I am going to put a 6-month chart on Nifty, and you can see generally ours is a growing and a developing market. So general tendency is the market is going to slowly and steadily go higher. So this is the 6-month candle what we are seeing. So more than a year, so historically if you start from say 2001, right? So almost in the last 25 years, there has never been a period where for more than a year. So this is one 6-month candle, this is the next 6-month candle. So this is one 6-month candle, the next 6-month candle, right? So there has never been a period for more than a year we have actually headed down since 2020, right? So even if you see during COVID, if you see during any point in time, so generally whenever we have seen the market continuously heading lower and lower for nearly close to around 6 months, so the market more or less starts to head higher from there. So we are already in the month of April heading towards May. If we are unable to recover, so then by end of May or June, so we would be having one full year of return in negative. And generally whenever that has happened, so we have seen the markets actually perform really well in the upcoming years. So it doesn't matter whether today the market is going to come down by another 5% or 10%, right? So today it is a very good time to buy. So why am I telling? So just based on few candles? Absolutely no. So for that again I'm going to open screener and let's go to Nifty 50. And here if you take a look at the valuation of Nifty over the last 10 years, right? So there has been hardly close to around 1, 2, 3 and 4 times that we have actually come to a PE of under 20 in the last 10 years. So historically if you go by this also, so our valuation is quite good. So we are pretty fairly valued, and our median PE is around 23, which means we are nearly close to around 10% or 15% off from our median. So this way, if you take a look at other metrics also, like the price to book value, so even here we are more or less fairly valued. So even if you go with more metrics like dividend yield, assuming, so even here we are more or less fairly valued. So whenever the dividend yield is the lowest, so that means the market is overvalued, and whenever it is the highest, it is undervalued. So with most of the metrics in consideration, that is the valuation with respect to PE, PB, how historically our markets have performed, and with ongoing this trade war between US and China, it can actually end up benefiting India, because once things in China start to become very expensive, so the US suppliers or US vendors are going to see alternatives with other countries, and India can be one of the biggest beneficiaries of this, because even if China is producing at a lesser cost than India, but if they have to pay 125% extra tariff, so that means their cost is naturally going to go up. So in such cases, maybe importing from India might work out better, or importing from other nations can work out better. So I'm not telling that, okay, this is a very good move for India, so it is definitely going to hurt India in its own way. So if the economy in US is going to go to shack, then obviously the entire purchasing power in US is going to drop. So that time it doesn't matter whether it's India or Taiwan or China, right? So overall the demand is going to come down, and it is going to impact indirectly. So broadly, if you take a look at it, even on the export front, we hardly export nearly $90 billion worth of goods, and the impact is going to be very minimal on the Indian economy. And this is also seen in terms of the relative strength our market is exhibiting. So if you take a look at it, ever since this tariff war was announced, right? So while most of the markets ended up coming down anywhere close to around 10 to 15% in a week, so we just came down by 3% on the same day, where most of the markets were down 10%. And the next day, where most of the markets were trying to find it difficult to come back up, so we steadily rallied close to around 1.5 to 2%. And tomorrow, in case today, as of today, SGX is suggesting a gap up of nearly 800 points. So tomorrow, if we are going to open anywhere around 23,200, that means we would have completely recovered from this entire mess. So we would be the only market, or the first market, or the only market to actually make a high than what it was on 4th of April. So given all of this, where we are relatively looking very strong in terms of technicals, we are looking fairly or undervalued in terms of fundamentals, and overall, so we have a historical record of whenever markets have not delivered returns for a year, so the subsequent years have been really good. So I feel going by the data wise, it might definitely be a good chance to maybe invest some amount of lump sum, or a good chance to increase your SIP at this point, because I feel the markets are pretty fairly valued. And yeah, so that's for what exactly or where exactly markets can be headed. So in my opinion, so bottom is not more than 3 months away, or we might have already made it. So we are not really sure of it, but I feel we are not far from the bottom, and we might start heading up from here. Yeah, so that's for today's video, sponsored by Delta Exchnage. And before signing off, I would also like you to check QuickAlpha's learning path, where we teach systematic way to approach market, both equities and options. So in case if you're interested, visit quickalpha.in and you can check out learning path. Thank you so much guys, and see you soon in the next video.